Hi everyone, this is Terence Tan. Let me wish all of you a happy new year over here as we comment and go into the first trading day for 2019. Now, so what is it that you need to look out for if you're still going to be investing in the markets, if you're still going to be buying stocks, what kind of things you should be aware about as we head into this volatile market situation right now. Is it going up? Is it going down? Nobody really knows, and nobody can really tell you for absolute certainty that this is what's going to happen. But let's have a quick look of what we can expect and what are the higher probability setups that we can expect the market to be doing right now, okay, as we head into 2019. Okay, so let's get to things over here. All right, so let's begin the new year over here as the market closed 2018 with the S&P up about 21 points over here, as you see, just shy of 1%, and the Dow Jones up about 265 points, just a little over 1% over here. But if you have heard of the latest news over here, starting off the day today itself, China didn't have really good news right now, so we actually see the pre-markets as we head into the US futures over here, slightly down for the day as we... Yep, all right, so here we go. The S&P is reversed almost everything that it's gained on the last day of the year. So this is what we'll probably expect to see into the markets today. And if it's going to last, nobody knows, because everything can still change. And that's the volatile nature of the markets. But if you're investing, let's just look in terms of probability and setups, what you can expect the market to be doing in the next few weeks to come over here. All right, now, so let's quickly take a look at the S&P over here for beginning. All right, so if we look at the S&P over here for starters, this is what we're seeing right now, and this is what the market has done in the month of December, all right, the very last month of the year. So it started strong, it hit a peak over here before selling off throughout the whole of December and rebounding right after Christmas on Boxing Day itself. Now, don't read too much into this bounce up over here, because any technicals will be able to tell, any technicians will be able to tell you what you're seeing right now is what they really call a dead cat bounce, where once you see something sells off so dramatically over here, you're going to expect kind of like a quick bounce, a quick strong bounce to catch anyone who's trying to play the game too late as we sell off over here, and then they get caught and then they reverse and cover up their short selling positions into the market. All right, so as you can see, the volume has also declined, which is very common as you head towards the end of the year in the markets, where there's a lack of liquidity and volume over here as well. So markets are very easily moved, so anyone with short positions over here would actually have to chase up the markets and cover their positions, which leads to the end of the year closing over here. All right, now, so this is what the market has done, and this last month of the year has struck a lot of fear over here. Have we gone into recession? Has the market turned around? Are we in a bear market right now? What am I going to do? All my stocks are red right now. Should I keep them? Should I sell them? What is it that you need to do? All right, but let's have a bigger look at the picture and how do you say this? Prime yourself. Yeah, all right, let's look at a bigger picture over here and let's prime yourself for the 2019, all right, and prepare yourself to scoop up those bargains when they actually come about, because that's how you're going to really make money when it comes to investing in the markets. Okay, now, so let's look at S&P from a bigger perspective and bigger picture over here. Now, so I'm just expanding this out to the S&P charts for about a year right now. So as you can see, a lot of concerns are being raised because the market has sold off from the last 1 year over here and it's broken its 1 year low. All right, so after selling off over here, it's broken all the supports that you're seeing over here at about 2,600 levels and 2,575 levels over here. And what people are saying as well is that they're seeing the 50 moving average cross over the 200-day moving average. So this is what they call the daily cross over here, and a lot of people are calling what we call the bear markets right now. But what we really need to do when we look at markets as a whole over here is to look at the bigger picture of things. Now, so when I say bigger picture of things, let's go to the weekly charts over here. And I'm actually looking at the S&P chart over here from what I call a 3 years time frame that I'm putting up. Now, so from a 3 year time frame perspective, you can actually see that the 50-day and the 50-week and 200-week moving average has not crossed or is nowhere near crossing yet. But what we have over here was in the December sell-off, we actually saw it hit the 200-week moving average before the bounce that we're seeing right now. So as we all know, a long-term stress level over here or long-term support level is not so easily broken. So it probably have to be tested a few times before the break actually happens. So what we're seeing now is the first test, and then we get the buyers to step in over here, and then, you know, after hitting a rebound over here, we may actually see the next wave of selling off where they try and test this 200-week moving average over here as well. Now, so the real test will be this 200-week moving average that we're seeing on this longer term chart as I put it out over here. Now, but I do expect, you know, a lot more volatility to continue to play in the markets because, you know, of various things that we are expecting right now, because the volatility index in the US market has gone up, has spiked up, which means fear level has set in. And on top of that, you know, a lot of the blue chip counters, a lot of the big counters over here have also started their selling off. Prices are being adjusted. But having said that, you know, there are also a lot of bargains that are beginning to appear in the markets, you know, for value hunters or for safe hunters in the stock market who have a longer term horizon when it comes to investing and making money and growing your portfolios. But let's look at some of the big guns which actually control and drive the market. All right, so let's look at Apple. Apple has been a darling for many investors because of not only its product, but how the stock has been performing over here. Now, so Apple is definitely one of the stock that has hit the trillion market cap range over here in 2018, and it's made a headline for that. And you can also see on the shorter term horizon, which is about a 6 months outlook itself, Apple has started selling off from the month of November all the way down to a low of this is about 145, I would assume. Yeah, all right, 148, 145 in the month of December itself, right about Christmas Day before the Boxing Day bounced up that we have seen in the markets. Now, but if you look at the longer term picture again, all right, so I'm just going to bring it out to a 1 year, this is going to be a 3-year chart. So you can see Apple is actually still pretty much on a very high level from where it's gone from 3 years back. All right, so 3 years back it was sub $100, so it's about $90 a share, and right now it's about $160 after the bounce. So if you realize this, Apple on a 3-year time frame is still up about 70 to 80% returns on average over here. So, you know, if the market is going to sell off, all right, we're actually going to see Apple make another leg lower over here. And if Apple does that, it's going to pull the S&P 500 index as a whole because it's going to drag the other big technology companies along with it on the down move. And, you know, as we have said in my earlier videos as well, that a lot of these big tech companies right now controls the S&P 500 index purely because of its market capitalization. Right now, so this is Apple over here. So if Apple does turn and it keeps going down, especially if it breaks this 200 weeks moving average at about $138, we will actually see the S&P drag lower along with it as well. So, you know, it has the market reach what we call, or, you know, technical term that people always use is this word called capitulation, all right? The extreme of selling over here. You know, if you ask me, I don't think it has. But, you know, if good news will start to come in over here from the markets, especially things like the US and China trade agreement and corporate earnings, which is about due in the month of January as well. So if everything turns positive over here, we may actually see the market rebound higher from here as well. All right, so, you know, we are in a situation where it's a little bit of a catch-22 because, you know, when the February correction came about, you know, many people think this is the end of the bull rally. We're going to see that huge sell-off as well, but only to witness the rebound all the way from March towards the end of November. All right, so this is the next leg down. What's going to happen? To be honest, I don't know. Right now, you know, the real honest thing that I can give you from an opinion basis is I don't know, because market never lets people know what it wants to do until it has finally done it. So anyone who tells you out there, you know, hey, it's a bear market right now, it's going to see a lot worse times over here, it's just a hunch. It's just a basis that they get from, you know, past analysis over here as well. But, you know, as an Impossible Investor in my community, we invest on the basis that we don't have a crystal ball. You know, ours is broken. Like I always tell them, sorry, mine is broken. I've never found someone who could repair it. But, you know, if you feel you do have the ability to repair these kind of crystal balls over here, do let me know. Because, you know, in my community, we need one. We have a 99% success rate. But, you know, if you have something that helps me build it even better, yeah, I'm all for it. Yeah, all right. Now, so let's take a look at the next big tech company over here. And I'm talking about the darling for the year over here with Amazon. All right, so Amazon over here for the last 3 years. All right, let's look at a shorter time frame first. All right, so Amazon for the last 6 months. All right, so we have also seen it sell off begin a month earlier in the month of October. And what we have now is a steady downtrend with Amazon because we're seeing lower lows. All right, lower lows on each sell-off over here and then lower highs as well. Yeah, all right. Now, so this is definitely what we call a downward trend for these players of this stock itself. But of course, if it were to be able to break this high that is done over here, then everything will be negated as well. But if it does make its next leg lower and drags Apple and Google along with it, yes, we're going to see the S&P actually sell off even further in the month of January. Right, but I think the earnings season is going to affect a lot of the outcome that is going to play out in the markets in the month of January, together, of course, with the China-US trade agreement. Right now, so with Amazon as well, so one of the things that concerns me over here is the fact that in the last 3 years, Amazon went from $500 a share, right, to about a high of $2,000 a share before coming off $500 right now to sit at $1,500 now. But on a longer term basis, you realize Amazon is still positive, and if markets are going to turn around, markets are going to sell, we are nowhere near the end of it, because when markets really sell off, they would actually drag all the hotter stock much lower, at least 40-50% lower from its high over here, before you see any end of it or any sign of near end of it over here. Now, so next we're going to go to Google over here. All right, so Google has done the same thing over the last 3 years. On a longer term horizon, you're seeing the same thing. It went from about $700 a share and it's still sitting about $1,000 a share. So it's still almost 50% up from a 3-year time frame as well. So it's not sold off much during this period of time. So if we start to see more selling off coming and dragging Google along with it, or if the earnings season starts to disappoint and Google sells off, yeah, we're going to see a lot more selling with the S&P as well. All right, now, so as we said before in my past videos, Google, Amazon, and Apple would account for really huge market caps in the S&P 500. Of course, right now it's much smaller, all right, but if we were to add the market cap of Amazon, Apple, and Google A and B shares over here, we are looking at a total market cap of these 3 companies, which add up to almost $2.5 billion, sorry, it's not billion dollars, $2.5 trillion of market cap over here, all right, just in these 3 stocks alone. All right, and of course, when these 3 stocks sell off, it's going to drag a lot of other companies along with it. So we're going to see what we have, the chain effect, when it comes to indexes over here, which is a basket of great companies. Now, so moving over to another one over here, which actually affects a lot when it comes to the Dow Jones Index, all right, and that's Boeing. All right, so if you look at Boeing over here in the last 6 months, all right, Boeing has started its downtrend, but it's still really relatively strong over here if you look at things. All right, in the last 3 years, if you look at Boeing, it's barely even begun any major sell-off. Yeah, all right, it's really barely begun any major sell-off at all, because it went from about $100 to $120 over here before it began its exponential move upwards without any signs of correction, all the way to about $400 or close to $400 before settling now at about $322. All right, so what's concerned most investors right now is sitting below its 50-day moving average on longer term basis. So effectively what we have right now is a sideways movement, or it's not near as bullish as it was for the last almost 3 years right now. So there's a lot of concern that goes around in the market right now. And of course, one thing that measures what we have in terms of fear in the market in the, when we talk about the US, it's really the volatility index. Now, so just showing you a chart on the volatility index over here, what we can see is with the sell-off in the month of December over here, let me just move it out to a shorter time frame, so it'll be a bit more clearer when it comes to signifying things to all. Okay, great. Now, so what you can see over here is the sell-off that we have in December. All right, it's pretty much measurable to the sell-off that we had earlier this year in the month of February. All right, so right now it's a matter of whether we're going to see a repeat of what we've seen in February earlier this year, or if things are going to reverse and it's going to drive the volatility much higher with this sell-off that's going to happen over here in the markets. Now, so with that, there's not much I can tell you right now. It's just exercise a lot of caution. Make sure your portfolio weightage is liquid with cash right now. This is not a time where you want to be heavily invested or fully invested with your portfolio in the markets. Don't try to bottom hunt right now. You can add on 1 or 2 positions, but make sure your exposure rate of your portfolio with the markets right now is sitting about anywhere from 30 to 50% of your entire capital that you have in your trading account. Right? I think that's really prudent when it comes to being a stock investor as well as an option seller, which we are over here. right? And when the sell-off really starts to come about, there's no harm trying to pick up much better bargains over here. And as option sellers, we know when the market sell-offs, volatility spikes, all options that we sell end up being more expensive. So our returns actually go up as well. Now, so it pays to be patient. Right now is the time where with the markets and its volatility and its fear right now, it pays even more to exercise caution and being patient over here. Right now, so with that, I like to end you on this note over here, and I wish you all the best for your trading in 2019. And for those of you I'll be meeting soon at this upcoming event, Market Insights Conference this weekend at Suntec City, I have something really, really interesting in store for all of you to share with all of you. And for those of you which will cross path with me soon at one of my Impossible Investor introduction sessions, I look forward to working with you and your portfolio and start to grow it with our 99% success rate that we have conquered so far over the last 6 years right now. We're definitely the one and only investing community over here who have done live trades with our community over the last almost 6 years right now. And we have a verified 99% success rate record, not by anyone, not by just myself, but our community members who have witnessed all the trades that we have taken with the markets live over the last almost 6 years right now. So if you're serious about building your investment portfolio and is looking for a mentor who walks the talk over here, I look forward to seeing you in my next introduction session come 2019 over here as we begin the year. Right now, if you find this video really useful for you, right, you can go to my YouTube channel over here, right, and just click on this subscribe button over here and make sure you never ever miss any one of my future videos when I upload them over here as well. All right, now, so with that, thank you very much for staying to the end of this video, and I wish you all the best for 2019, and I look forward to seeing you in my next video. All right, do leave a comment if you find this useful over here or anything you'd like me to cover in my next coming up videos over here. All right, and do look out for my stock number 8 and number 9 that we favor for 2019, all right, as we begin the year on the first week over here. All right, have a great day ahead, and I'll see you soon. All right, see all of you. Goodbye.